personally know many profitable traders, and they all have a number of common qualities. One of them is that almost all the profitable traders, unlike beginners, trade primarily based on price action rather than indicators. Well, let's be honest here, I understand why this happens. Despite the profitability of price action, this type of trading is much more difficult. It requires weeks and months of practice. Well, in this video, I'll try to change that. I'll show you a simple but profitable strategy with a confirmed win rate based purely on price action without using any indicators. And by the end of the video, even a beginner will be able to apply it. And this strategy is purely mechanical, so we will put all the steps in checklist and just repeat the simple steps over and over again. But for now, let's get started. Okay, so first things first, we need to talk about the rules of the strategy, and according to those rules, we need to set up the platform. I work with Quotex, and of course, first things first, we need to choose the correct type of the chart. When you're just registered on a platform, your chart is going to look like that. This is crazy. I have no idea how to work with that, and we are actually using candlesticks with our strategy and every single strategy that I work with. Next thing we need to understand. So for example, right now with the candlestick type of chart, each candlestick shows us the period of time or time frame, and it can be set up right here. Right now we see that each candlestick shows us 1 minute movement of the price, and of course you can change it to like 5 minutes, 10 minutes, doesn't matter. Each candlestick will show you the time frame that you choose. Our strategy use 1 minute time frame, so we leave it with the default expiration time. Default one is 1 minute. I use 3 minute expiration time. If you have seen any of my videos or my streams, I always use it. I always use 3 minute expiration time. If you are wanting to change that, you need to adapt the strategy, because this one only works with 3 minute expiration time in my case. And the currency pairs that we are using is only the real currency pairs. So for example, USD, GPY, Euro, British Pound, everything else except the OTC currency pairs. I have the special video talking about OTC currency pairs and explain why you shouldn't do that. If you're interested in that, you can watch that separately. For now, simply focus on normal currency pairs. But before that, I want to remind you that I have an online trading academy that you can join absolutely for free. Just simply text me on Telegram, I want to join. And the link to Telegram is as always in the description box down below. And of course, besides my exclusive lessons, you will receive constant support from me and your supervisor, as well as access to a student chat where you can chat with like-minded people and share your experiences. But in the meantime, let's continue. Alright, okay, so let's start talking about the strategy itself. I will show it first on TradingView, but then we will go back to Quotex and talk about the deals there. TradingView is a bit easier for us to see the point of the strategy. So since our strategy is based on the trend, we need to, first things first, find the trend on 1 minute time frame. And we see the time frame here is the same as a Quotex, and now we need to understand the trend. So if you're the newbie, you already understand that obviously this is an uptrend, but you still need to understand the structure of the trend. So it started right here from this point, then it moved upwards. There was a small correction, it dropped, then it rose again, and then it dropped again, and right now at this moment it is right here. So the price is moving not all the time upwards. It has some pullbacks that you can see on the screen right now. In this case, what do we need to see? We need to see that the price is constantly forming higher highs and higher lows. And we see that the first point is our swing low, then we have higher high, higher low, higher high and higher low, and another higher high. And this is the structure of the uptrend. And according to that structure, the price should sometimes do the break of structure. Give me 1 second, trend line. Yeah. So the break of structure is when the price along the moving is breaking through the maximum. So we see that the price rose to that max, then it dropped down, then it rose even higher. This is the breakout structure. So the price again did the same thing, and the next impulse movement upwards broke through the previous maximum. So we obviously understand that we have breakout structure and this is a valid uptrend. With the downtrend, it's going to be the same situation. We will talk about it a bit later. Now let's move on to the next step. The next step is to wait for the pullback, and this is a really important step. So of course, when you see an uptrend, you can enter into a deal at any point and the deal is going to be closed in black. Of course, no. If we would enter into a deal for an upward trend at that candlestick, then it would be closed in red, and same situation right here. So we are interested in the opportunity of entering a deal at the lowest point. So if we are entering into a deal when the price is moving downwards, then we have the best chance to get the best price. So right now we see that the price was growing. It dropped a little bit, but we have no confirmation for us to enter into a deal for an upward trend, because we can see that the price is going to drop even lower, which it is happening actually. So entering into a deal for an upward trend there, the deal would be closed in red. And now we actually see that the price is rising again. Usually working with pullbacks, a lot of people would enter into a deal right there. But since we're talking about a strategy for beginners, this is going to be a bit different because the win rate for us is supposed to be higher. And we need to wait for another confirmation. Let's see what's going to happen. And right now you see that the price is slowing down and going back down again. And in this case, we see a really interesting formation. So according to this uptrend, moving along this uptrend, we see a little double button. We see that the price rose and dropped twice after rising a little bit more. And this is our double button. This is our double button. So this is the zone where the price touched it twice. And this is our setup for entering into a deal. Okay, so now we have quite an interesting situation. We have an uptrend, so globally the price is moving upwards. And besides that, we found some sort of support zone from which the price is jumping upwards. And now, does this guarantees that the price is 100% is going to rise? No, of course not. The price can still do the reversal and go downwards. But the most amazing thing about binary options, we don't need a strategy with 190% win rate. 58% win rate is enough for us to get the money, to get the profit. So all of those confirmations that we collect, they rise our win rate. So the price is globally in the uptrend. The probability of the deal being closed in black, high. Also, we have the support level also getting higher, but we also need additional confirmation. With each additional confirmation, the probability of the deal closing in black is higher. And in this strategy, we're not going to make it too complicated, and we just gonna take, like two, but one of the most important ones. And the first one is the loss of momentum. This is our step number 5 in the checklist. So we see that the price went to that point, it dropped, rose, dropped again, and right now it's growing again. We are looking at how the price behaving, how the candlesticks behaving when it's reaching the level. Right now we see that the price was going higher, it was pushed backwards, impulse movement, aggressive movement on the candlestick after that. And the next one, we see that the sellers lost the control. They pushed the price until the end of this shadow, then they actually pushed it backwards. So we see that the sellers are losing the control, and most probably the control is going to be owned by the buyers, and that is the loss of momentum. We don't really have a good example right here right now, but imagine that on the point of this candlestick there would be this huge big red candlestick. Having this candlestick, if it would be there, just imagine that, we understand that there was no loss of momentum and the sellers are only getting stronger. So Even if the price went to that level, it doesn't mean we need to enter into a deal. Right now, we see that the control is lost, and this is our additional confirmation. And the last confirmation to enter into a deal, we are going to use candlestick patterns. So there are a lot of different candlestick patterns. Any price action trader should know how to read them, and I have a lot of videos on the topic of those patterns. Recommend watching that. But for us to make this strategy as simple as possible, we will talk about two types of patterns. So it's going to be bearish and bullish engulfing and morning and evening star patterns. So let's look at the chart. Right now we see the pattern morning star. It contains 3 candlesticks, huge red candlestick, then doji candlestick, doesn't matter, green or red. So doji candlestick, by the way, it's a small body candlestick with long shadows on the top or the bottom. It shows us that there was fight on the market, showing that someone is losing the control, So small body, long shadow. And after the doji candlestick showing us the fight between two sides, the third candlestick should be the green one, and it should be quite big. It shows us who won in that fight that we saw on a previous doji candlestick. So right now this pattern is called morning star. It's a bullish candlestick pattern, and it's a reversal pattern. Seeing this, you can probably understand that the price is going to rise. So when we have that confirmation as well, we will enter into a deal. But let's see how we're going to do that. First of all, we see an uptrend, right? The price is moving upwards. Then we see the support zone, the zone from which the price is jumping upwards. Then finally we saw the loss of momentum, looking at candlesticks, and we see the reversal pattern, one of them. So we have huge amount of confirmations showing that the price is going to grow after this candlestick, and after we have all of them, we will enter into a deal. So at the opening of this candlestick, we are entering into a deal for an upward trend, waiting for 3 minutes, and the price is shooting upwards and we're getting the money. Now, using the same checklist, let's talk about a deal for a downward trend. So in this case, opening this chart, we obviously see a downtrend on 1 minute time frame. So from this point, the price started dropping. After it reached this point, it was a little pullback after, then the price dropped again until this point, grew again. Oh my god, it dropped again. Look at what's going on. So it grew again, and right now the price dropped until this point. So we obviously see a downtrend. And actually this case is a bit more interesting. We see a little consolidation right here. We have equal lows and equal highs, but globally, of course, the movement of the price continued going downwards. And right now the price is actually growing. So we are at this last pullback that's happening, and it started already. We see that the price started moving upwards, and we found our first pullback. Then let's see what's going to happen with the price after. Price dropped again, but then it did the reversal and moved upwards. And right now we have our pattern double top in this case. So the previous one was double bottom and this one is double top. We see that the price actually creating this kind of a support level. So the first touch, not the support level, but the resistance level in this case. Then we need to look at the momentum when the price is reaching that level. We see that it dropped, and after which we see a really aggressive green candlestick. The next candlestick reached this level, so it was really high. We see it on the shadow. Then it was pushed downwards again, and we see huge green shadow on the green candlestick, meaning that the buyers are losing the momentum and the sellers are getting the momentum. And then we see a huge red candlestick, and those two candlesticks create the bearish engulfing candlestick pattern. So this candlestick completely absorbing the previous green one, telling us that there is a huge impulse from the sellers. So we are pretending that we are entering into a deal for a downward trend after collecting all the confirmation. And the price danced around but it started dropping and we got the money. Now let's talk about even more interesting things. So right here we see triple top structure, but of course let's start from the beginning. First things first, we need to find the structure of the trend. So it kind of moves something along the way of this line. Right here we see this is obvious downtrend, and we have our high, then a lower low, lower high, lower low, and right now lower high. After this, the price actually created the double top. So in this point, somewhere along those candlesticks, we could enter into a deal for a downward trend, first one. But at the same time, we see that the price dropped, it came back upwards, and right now we see triple top. So this level is working for the third time at this moment. Of course, logical question in this situation, what should I do? Basically, same freaking thing. Nothing have changed with the double top, but this level actually became even more, even better for us, you know. The only thing, we don't really have an obvious loss of momentum. We see that when the price is moving closer to the level, the momentum is actually growing. It's not being lost. But we see that when the green candlestick touched the resistance level, it became even bigger, right? There was no momentum lost. We can actually see it on the next candlestick. We see this bullish engulfing candlestick, and then continuing the trend with this candlestick, we would probably enter somewhere here. So, and obviously you see that this would be also closed in black, and the price is actually moving even lower. And to finish it off, let's look at some more examples. Why not? Here we also see obviously an uptrend. We are looking at the structure. We have our low, then the price rose, then there was a pullback, of course our higher high being created, then the price grew, we have higher high, and from here we see our first pullback when the price dropped, after which the price rose a bit. Then we need to see what's happening after that. The price is dropping again, reaching the same level, creating our double bottom. And also we're analyzing candlesticks, of course. In this case, we see that after double top, we have loss of momentum. So the small candlestick, then impulse, huge red candlestick, and the last one showing us the momentum is being lost closer to our double button. And the next candlestick is green colored, a huge one, not like a huge one, but still bigger, showing that the price is continuing to grow and the control is in the hands of bulls. So the price should rise after this moment. And of course, in this moment, that actually happens. What is really important to understand? So in all 4 examples, we have great analysis and all the deals were closed in black. But it's really important to understand that it's not going to happen all the time. Even if your strategy is unbelievably good, and especially when you're a newbie, even if your strategy is great, you will still make mistakes. And your loss is still going to happen sometimes. It's impossible to have a strategy with 100% win rate. If someone tells you that they have 100% win rate strategy, don't believe them. They're liars. So, of course, the most important thing in situations like that is to have really good risk management. So again, first things first, good strategy, but we also have 3 different things about risk management. Number 1, 2% of the deal for each deal. So for example, if you have a $100 balance, you shouldn't open a deal more than $2. You need to know how to control your amount of money. If you're going to risk too much on each deal, you're risking to lose everything. If you lose everything, game over. Your most important thing as a trader, you need to stay in the game as long as possible. You need to be really cold-minded. You need to be really calm, and trading is not for those who cannot be 2 of those things, cold-minded and really calm. So 2% of the amount of your balance. Next rule, 3 deals can be lost in a row, after which you need to stop the session. It's a really important rule because, you know, you can think, yes, you are not losing control, you are focused, you're really focused on everything. But you know what? In my opinion and in my experience, it will never go that way. Even when I'm losing deals one after the other, I try to lose focus. I start to lose control. I start to lose focus, and I make more mistakes. And of course, I'm getting even more losses. So that's a really important rule. 3 deals in a row being lost, the session is over. Get like some rest, drink some tea, go for a walk, then come back after like 3 hours when you're completely emotionally calm, you don't have any pressure, then you should come back. And the last rule that I think is really important for the beginners, do not use martingale. If you don't know what that is, martingale basically is the system that rises your amount of money 2 times after you lose one. So for example, the one was opened for $50, you lost it, the next one is going to be opened for $100. So it covers the loss of the previous one, and additionally it gives you a little bit of money on the top as a profit. So basically you don't need to win every single deal, you need to win one of 2, right? It sounds good. But when you are just starting and you're just practicing, it's really dangerous system that can lead you to making, again, mistakes, and at some point you're gonna lose the money and you're gonna lose everything you had. Martingale is a really good instrument, but it's a good instrument for those who have experience. But if you're just starting, do not use martingale for sure. Alrighty traders, let's finally start practicing with Quotex in real life time. We are using live account and the platform is already ready. And you can see we have 1 minute time frame, 3 minute expiration time, and we are using 2% from our account. And you can actually choose how you can use the amount of money. So in our case, it's going to be 2%. The investment for us is going to be $167. We also added all the currency pairs with good payout, you know. In my case here, it's not lower than 84%, just because if you're using currency pairs with 60 or 70%, you understand that you're risking the same amount of money, but the profit is lower. And you know, it's not good. So I'm trying to work with 85% perfectly, and of course higher is amazing. So now we need to go through all the currency pairs and find a good setup for us. So let's get started. Okay guys, so something looking like our setup is AUD GPY currency pair. In this case, we see an obvious downtrend. This is our high. Then we have lower low, lower high, lower low, lower high, and everything else. And right now we have the double top structure, and now it looks kind of like a triple top, but momentum is not dropping like it did before, but it's actually growing. So this setup is not good for us, and we're not working with it. Moving on. Alright, okay, so we finally found our deal. It's going to be USD CAD. We see our downtrend. This is our high, after which we have lower highs and lower lows. And in this situation, we have a pullback. And from this pullback, it kind of is on the same level as the previous one. So let's put our zone of our double top. So it is somewhere right here, and what do we see here next? Yeah, like that. In this situation, we see while the price was coming back to the top, we see a huge momentum, green candlestick. The next one was much smaller, and additionally we see huge shadows. Then we have red candlesticks forming. We do not have engulfing candlestick, and we had to wait for the second one, and the second one was the confirmation for bearish momentum. And after this candlestick is closed, the deal is opened for the downtrend for 3 minutes using 2% from our balance, and now we have a little bit of time to wait and see if the prognosis was correct. Alright, okay guys, so the deal is closed in black, meaning we got the money and we got our profit. So the payout in this case was $318, and that's amazing. Well, friends, I hope I managed to explain the strategy in as much detail as possible and everyone understood everything. But if anyone has any questions, make sure to leave them in the comment section down below. And by the way, if you want to start understanding price action in more detail, I recommend starting with this video right there, in which I have analyzed the market reading algorithm. So that's going to be it for us for today. Thank you so much for watching, and I'll see you in the next one. Bye bye.